Okay, hello, this is Jennifer Broadwater, and this webinar is going to take a look at the different ways that revenue can be recognized depending on the type of invoicing you do and how that affects your balance sheets and trial balance. So this isn't an especially long webinar, but we are going to, before we dig into the gist of this webinar, I do need to go over a little housekeeping with you guys. So I want to take a moment to let you all know that Workamajig does provide accounting and project management software in all-in-one package, especially designed for the needs of marketing agencies. We do these monthly webinars on a variety of topics, and you can find them in our help guide, which is probably where you all found this one, at support.workamajig.com. And you just kind of type in webinar. So after this webinar, I always get the question is, when will this be posted? It takes about 3 to 5 days to be posted. So, and it will go up on YouTube, but you can find the link through our support.workamajig.com website. And you can download that to keep if you'd like, or just watch it if you need to see it again. In addition, I am pretty much going at a higher level. And if you guys want to dig deeper into some of the stuff I say today, you can get more information after this webinar by writing to your trainer. So each of you guys that are part of Workamajig do have your own trainers, and you just write to support@workamajig.com and tell them that you want more information on revenue recognition. So, all right. So first, before we get started, I'm going to give you a little summary of the 4 different ways you can recognize revenue. And then we're going to go over some details, like some examples that I've already set up that will help you see the differences and hopefully determine if your agency is set up for the best possible profitable way for your reporting purposes. Each company I have worked with, I've been here for 5 years, is a little bit different. So some of my companies will be like, oh, our projects are a quick turnaround. It's just necessary for us to bill them really quick and then recognize the revenue right away. So they just do regular invoicing. And then I have some that do these really long projects, or what we would call campaigns. And so that's going to be treated a little bit differently when you're looking at when you want to bill based on that. And then we also have people that do a lot of media. And if you're doing a lot of media, you may want to pass that cost from the vendors off right away to your clients. And the way that you invoice that can definitely affect your financials. And finally, I also see people do a lot. Sometimes you might have a lot of pass-through expenses, and that's another way that you could look at things. So all of these will play a part in the way that you do recognize your revenue. So first, I'm going to go over just some basics of, what are these 4 different things Jennifer's talking about today, and then we'll go ahead and take a look on my page that I've already set up here for the different things. So we're going to be going over these in a minute. So first of all, we've got regular old invoicing. So, this is the kind, and I'm going to take a look at this in the future in a few minutes. This is the kind when you just make a project, and then you bill your client and you recognize your revenue immediately upon posting those. It's very basic, and it works for most of our clients. I mean, that's usually the way they may start using Workamajig when you're first trained. You might just be like, let's just do regular invoicing right now because this other stuff might be a little too complicated. But after you get used to Workamajig, a regular invoice may be used in some circumstances, but not all circumstances. So the next way people start using, I usually see for my clients, is they start going into what's called advanced billing. Now, I do want to let you know, and again, we'll be going over each of these in a second. Advanced billing does not recognize revenue at the time of the advanced billing. It actually posts to a liability account when you bill it. I know, crazy, right? It's going right to a liability. But what happens is you have control over when you want to recognize that revenue, which again will directly affect your balance sheets and trial balances based on when you actually do a revenue invoice against the advanced bills. All right, so that's the second one. Then we're going to go over pre-billing. Well, pre-billing is a word you guys probably have already heard, even if you were from another agency. I mean, that typically is for marketing agencies that have a lot of media and they don't want to foot the bill for their clients' large sum of media. So they do what's called pre-billing. So pre-billing will recognize revenue at the time you post your bill, but it will also post to a liability account for the future expense. It's kind of like a little fake account. Well, it's not really fake, but a separate account that you would see that liability go into at the time that you pre-bill a purchase order. And finally, not many people will use this one, but we do have something called WIP, works in progress. It's usually not necessary for all of my clients, but I am going to go over a little bit about it because the reason that you would use this is if you have a lot of unbilled expenses or labor, and you don't want to see all of those expenses first. It really allows you to not get those peaks and valleys when you look at your income statements, and able to recognize your expense and your labor at the same time you're recognizing your revenue. So it kind of evens it out. It's much more complicated because there is a lot of setup for your accountant behind it, but it does work for some agencies. I would say only a tiny, maybe 3 to 5% of agencies actually would need to use that way of billing. All right, so now we're going to take a look at each of these ways and dig a little bit deeper into each one of them. And let me get over to that. So first one's really quick and easy. So we're going to take a look at a regular invoice and what it does to your financials. Well, regular invoice, I don't really even need to dig deep in. So I've preset up a regular invoice. You may have a project. And when you go to billing, you're going to have a regular revenue invoice on here. So it's not real exciting. And everybody knows what happens on a regular invoice, that when you post it, it's going to be going to your accounts receivable and then broken up to, or maybe one line or multiple lines, depending on how you do this. So you're going to see that revenue hit right away. Now, for all of these, I'm going to also mention and show you that if you did not know this, if you are more of a project manager type person, then you may be in the project versus in the accounting page. And I do want to let you know, because it's hidden, that you do have an area to see project profitability right in the project. And if you do not see this on your page, this is a good place to see it. And if you are a admin, you would be able to add that in by hitting your more key from the projects page, schedule area, and then going down to show the project profitability to be added in. Now, if you didn't want everyone to see that, you would select which groups could see the project profitability. Nothing really private going on there. It's just going to give you, hey, where are we at with our revenue, as opposed to, you know, where your costs are coming from inside and outside and all that. So this is it gives you different ones, but this is the one we're going to concentrate on today. So as you can see, if I do a regular invoice, it shows up as revenue on here. It's very, very simple. So that one we're not going to waste too much time on, because I'm sure you all know what that does. Now, moving on, we next have advance bills. Before I dig in there, so the purpose of the advance bill is for those of you who want to get a deposit, but you don't really want to record your income yet. So of course, everybody wants to deposit up front, right? It's very safe. It's a good way, a method to, you know, you might have a sketchy client or something that you've never worked with before. Advance bill would be a good way to get some money in advance before you start even working on the project. But oftentimes you don't want to just, you know, take that as income right away as revenue. You want to wait. So basically, your advance bill, if you have that checked or you're doing that, it's going to hit your sales account into an advance bill account. So it's going to be generated a little bit differently. Your financials, it's going to go to a liability account, and it's not going to report any revenue at that time. So on your balance sheet, you will be able to see how much you posted into the liability account as where you received your deposit from your clients. So that's the first part of that. So if we haven't hopefully you guys have heard of the word, you know, recognizing revenue, but I did just want to quickly tell you what that does mean. So when you work your projects, you create client invoices for the amount you're ready to recognize for revenue. So sometimes an invoice is sent to a client, or sometimes during advanced billing, it's not sent to the client. It's just used for the reporting purpose. So let me go into that a little bit deeper in a second. When you have a advance bill, also, the only way to get it out of the advance bill and recognize it is to apply a regular revenue invoice against it, and that will post to your income revenue account. And the balance sheet will show reduced liability balance, and the corporate P&L income statement will now show revenue when we actually apply a revenue invoice against an advance bill. All right, so let's look at this one first. So it will kind of make more sense. So it doesn't really matter what I'm doing, but first I just want to show you. So the billing I did ahead of time, so we didn't have to waste time seeing all this ahead. And you'll see that I made an advanced bill here for the entire amount. And then I came back after I advance billed the client and I said, I want half of that money to be recognized. So you may give your client the first bill for the advanced amount and then recognize revenue on a different date. Typically it wouldn't be the same date, but that's when I did this, for how much you want to. So it could be little by little. You could recognize the whole thing. You could give this one to the client if you wanted to, and not give them this one if you wanted them to, do the opposite. But most people would, give the advance bill to the client and then recognize revenue little by little. So when we open this up for this revenue invoice, that's after we did the advance bill and decided we applied half of the bill. I said 50% of it I want to show now my revenue. So I grabbed this from the advance bill and applied it to this. So when you look at the posting details, super exciting here, it comes out of the advance bill accrual and goes into your revenue for that amount. Now I'm going to take you over 2 more places. So if we look at this one, back out from the project profitability page, like I said, this is a good place for your AEs or project managers to know what's going on. You will see now that revenue of the half that I took after advance billing the entire item. If you would have seen this prior to me doing the second part, it would have had 0 revenue here, right? And it would, but now that I did this, so because I wanted to show the financials at that point, it was kind of hard to do both at the same time. So going out of here, I'm going out of this because you don't need to see this. I just want to show you, well, we don't need to actually see these, but the balance sheet and the trial balance before I actually did the revenue invoice against it. If you would have looked at the balance sheet, it would have showed that you have no income on it. It's just going to have my advance bill accrual account at this point. And when you advance, it's just going into that liability account, but no income. So that's prior to me recognizing revenue. So that is your balance sheet. So I just have this in the little PDF summary of your balance sheet there. So there's different ways to do this, but I just thought for this call, and it is kind of small, I do apologize. This would be the easiest way to see it. Now, if we also, prior to me recognizing revenue on that one, wanted to look at the trial balance, it would have looked like this. It would have just been a debit to your accounts receivable, and the credit is to the advance bill accrual liability account, which should be set as a liability account. So in this case, that 100% of that money is going into the liability account, and that's my advance bill accrual account. So that's all that looks like on a trial balance. If you had nothing else on your trial balance, which I tried to make it very simple by clearing everything out except for that one item, so you could see where it goes to. All right, so now I said on that second part, I went ahead and did half of it to a revenue invoice. So now if we look at the balance sheet, what happens now? Okay, if I can open the balance sheet, there we go. Now you're going to see the net income, or the income off of these is half, basically. So your advance bill accrual account will go down and your income will go up. Your revenue will go up. So the main point of this is you decide, when do you want that revenue to be recognized? In this case, I decided to do the 50% because that's pretty simple off of this bill. And this is just letting you know it's going to take the money out of the liability account, recognize the income on your balance sheet. So that's pretty simple. You'll very much easily see that when pulling your balance sheet on here. And then finally, for advanced billing, if you're taking a look at your trial balance, you'll be able to see the accounts again, totaling the total amount of the bill for the grand totals for your revenue. Is on this line for your 1535 you've recognized, and the advanced bill accrual sits with the 1535, and then the accounts receivable is 3070. All right, so very, very useful information. And as far as most of our clients like to know where's the money being reported at on these type of reports. So that one is how we would work in advance. And again, you would probably then do another one after this for the other 1535, and then the grand total for your revenue would be the total of 3070. Makes sense? Very simple. All right. So the next thing, so that was this one we've gone over. Now we're going to talk about the pre-billing. Pre-billing is typically done when you have you want to pre-bill for an order, which is most likely some type of large amount that you don't want to keep for yourselves. So the purpose is really you're billing your client for an expense. You haven't received that actual expense from the vendor yet, right? You haven't got it, so we're pre-billing them. So the difference between, if you want to go back to, you know, the versus using an advance bill, the pre-billing is billing an order before the vendor invoice is received, and it will post to the income and revenue right away and the expense. So you're going to see it have a little bit lengthier entries on it when I show you this. So for your financials though, your client invoice is going to post to your accounts receivable on your balance sheet and your income account on your P&L trial balance. It'll also post to your pre-bill liability account on your balance sheet and your expense, or what we would call your COGS account on your P&Ls. All right, so although the advanced bill posts to liability account, and the pre-bill post to liability account, they handle it very differently in Workamajig, and they should never point to the same account. That would be terrible. So don't do that. You can set up these accounts in the back end with your help of your actual accountant. If you need help from Workamajig, we can probably guide you on that later. But basically, it's going to reverse for this pre-billing that we're looking at. It's going to reverse out the vendor invoice by debiting the pre-bill liability account and then crediting your COGS account, basically reversing it out automatically for you. And there's nothing you have to do when you that amount is posted by the invoice. All right, so on this one, we'll just take a look again and see a couple of things. So we went to billing. Let me go through that first. And you just see that I have an existing invoice. And if I go to the invoice, I just called it pre-billing to make it simple. You can open up the line and you can see that the expense, which is the purchase order area, is the PO that was for $10,000. So I billed this ahead of time, made a purchase order for that, and that's exactly what I did. Then when we come out on here and we look at the project profitability, it will show up, like I said, as revenue immediately upon billing the pre-bill, but we'll also have the same expense on there also, as you can see. So that's what happens first. And now, if that makes sense to you guys, hopefully, I'm going to go back out so you can see what it does on the financials. All right. All right, why did I miss one? So the pre-bill. All right, so the pre-billing, here it is. When you're pre-billing the order for 10,000 is what I did. You're going to, let me see if I can drag this and make it a little bit bigger because I didn't do, now it gets a little blurry. Sorry about that. So your assets are going to be 10,000, your liability is going to be 10,000, and then this is all going to get reversed out when you actually get the vendor invoice. Okay, so that's the first thing to note, is it's immediately recognizing your revenue for that. That is on your balance sheet. Then the pre-bill trial balance, it's going to look a little bit more crazy because you're going in and out of two different accounts. You're going to have your accounts receivable, your pre-bill accrual, all of a sudden I can't speak, and your gross revenue for the 10,000, which is your sales account, which could be different than mine. I just did it as a media item, and then your COGS account for 10,000. So those will balance out each other during the trial balance. All right, so that's again, I put a little disclosure down here so you understand that when you do receive the vendor invoice, it's very important to know if you had pre-billed the order and you posted that, when you post that vendor invoice that comes in, it's going to automatically credit your accounts payable, debit your cost of goods sold, and then credit the accrued cost expense account and debit your pre-billed accrual liability account, which is reversing out your accrual from the pre-billed order. So all of that happens at a click of the button as soon as you post that vendor invoice, right? So that's how those work. And again, it's really up to you guys whether or not you find that feature is something that would be useful for pre-billing versus advanced billing, right? Okay, so the final thing is WIP. So WIP is obviously work in progress. And there's actually a separate webinar that's done in very much detail for those of you that are, after I explain this, say, oh yeah, this is what we want to do. We do have another webinar that will detail out the WIP process for you. And there is also probably like 20 pages in our help guide article on WIP also. Well, maybe not 20, but it's kind of deep. So let me go back over to my projects and we'll dig into this one. So the purpose of the WIP is to allow that your expenses and your revenue post into the same period. So sometimes you might have a longer project, or if you are, I mean, I wouldn't do this. Oh, pardon me while I check on this. There is a question, what happens when your pre-billed vendor invoice comes in, it's less or more than the original pre-billed purchase order? You can make the adjustments at the time it comes in by closing out the lines on the PO after making the adjustment. So we can show you individually, Erin, how to do that. All right, so back to this real quick. What was I, now I lost my little track. So WIP allows, let me just back up 1 second. WIP allows the posting of an on-billed labor and expense into your WIP accounts. So they're really kind of like these little separate accounts you set up. And then they are reversed out when you bill the client and then post WIP again. So this process is done under the Accounting Today page, which I can kind of show you where it's at and what will happen. So when you have your cost of goods sold expenses posting in the same month of the revenue. So my point was on here is if you have a long project and you have a lot of expenses, or you have a quite a bit of just went blank, people working on that, and you have a lot of labor over a period of time, that's accruing those expenses in one period, but not recognizing revenue until you actually bill the client. So you might have what's called, we would call peaks and valleys when you look at your statements. And a lot of clients don't want to see, hey, we have like zero income and all these expenses in March and in April, and we look like we're going under. And then the next month you have all this income and you look like you're going to Disneyland, right? So it kind of balances it out all in the same month if you are going to do, decide to do WIP. So let's look at this last example for that. So for billing, there's not going to be billing on this one. I don't know why I'm even clicking that. So I've done no invoices on this. All I wanted to show you on this is I have some labor for $1,875 and I have a vendor invoice for $5,000 also. So I have $6,875 that is sitting there as some expenses that are cost of goods sold right now. So what we do is, and yeah, if you see the project profitability, it's not looking so good. You have outside costs, right? No revenue. So what we do, and I will let you know, is we have a place, if you haven't already seen it, where you can post WIP. So it's on your Accounting Today page. If you have access to this page, you will see works in progress. Okay, so there are no WIP batches because I didn't actually place that on this one. However, we're going to look at what it does. So first of all, when you do post WIP, if you decide to take this method, we have what's called, before you actually hit the post button, is a I guess pre-posting report, kind of like you would have for your other accounts, a pre-posting report. And so you can look at the totals of what's going to be your labor and unbilled expenses and labor that total that 68.75 and where they're coming from. Obviously I have this set up for just one account. Obviously this would be for all of your accounts. When you hit it, there is a button if you wanted to exclude it on a project and say don't post WIP on this particular project. Otherwise it's going to look at all the projects that you have in process when you go through this. But there is a spot that you could eliminate a project if you wanted to. So first you would, look and make sure this is what you wanted to do on your pre-posting report. And then what happens when you actually post the WIP? Let's go, let me try and make this bigger again. So typically you have to set these, well, actually there's no typical, you have to set up these accounts ahead of time. So you have to turn on WIP for this to work. And I would not do this without going to your account manager first and making sure that you have it all set up correctly so you don't mess anything up. But when it's posted, you're taking all of that unbilled labor and moving it into these WIP accounts. To me, it's where it hangs out until you actually have you bill the expense or the labor to your client. So it's kind of like, you want to see this in a separate area, not in with your regular financials. So that's why this is set up. So first, you're going to see all of the works in progress here in production labor. Mine are separated because one was an expense and one was labor, but it totals the same as what we just looked at for the 68.75. So these cogs are left there until the client invoices is created and WIP is posted again. So usually this is done maybe once a month. So once a month, all of the stuff that was labor and expenses that has not been billed yet goes into this pot of work in progress. And then you do it again, and anything that was billed during the month comes out, and anything that was waiting to go in goes in. So it's just like a continual process of going in and out of this. And again, when that happens, then your labor and expenses are in the same period. It will recognize it in the same period as your revenue. So that's the posting details of that. Let's look at the trial balance for a minute. Again, let me try and make this a little bigger. All right, so what happens on the trial balance when you click the post WIP is you're going to get a works in progress labor and production, and then your accounts payable, and what I have is an adjustment labor account, but these accounts were set up specifically for posting of WIP. So of course they balance because that's what you want them to do, right? And then your balance sheet. So, all right, so what we can see here, go over here, 1 second, is you have some WIP assets, again, totaling on the balance sheet for those accounts, 68.75 broken up by the two, labor and expenses or production for me. And then we don't really have any income until we post them. So what I was going to do on this call is actually go back to that project and bill that expense and then show you what it looks like and then post WIP again so you can see it coming out. So this is the last part of this. Anyway, oops, so I need to go to that project. Bum, bum, bum. And it's this one. So we're just going to go over and bill the entire amount as it's on build. And we're going to create a revenue invoice for that, for the total amount, and post it. And then we're going to post WIP. We'll come out of WIP, hopefully, if all goes correctly. A little slow here. It's thinking about what it's going to do. Great. I'm going to approve this for 68.75, and I'm going to post it. So now that it's been posted, which was what it was before I had unposted before. I mean, not for the previous one, but now we're posting the actual invoice so you can see what will happen. So we've got our income and expense there. And now we're going to go out and I'm going to show you the last part, which is what would happen and pretend it was like the first of the month and you decided to go into the today accounting and post WIP again. So hopefully I should have done this previously. Actually, I'm unsure if this will show up because I think I've forgotten to do one prior to. So this is the, yes, 1250 and the 5,000 in here for the total. Okay, so let me just go ahead and show you what, again, this is the pre-posting report. And when you're ready to post WIP, I have to make a comment about it. And then you hit post, basically. And so inside of here, it's going to show you the in and out of the WIP in labor and WIP out, works in progress, invoice and invoice. And now hopefully if I've done this correctly, it's on that, then it's posted. Then if we look at the financials for that specific one, oops, that is not the one I wanted to do. Okay. Hold on one second. I was actually posting the wrong one. That's why the figures looked a little bit off. All right, so I had to make a separate GL company specifically for that because I was like, it was not that amount, but there. Okay, so that was right. Now we're going to post this one. Oops, comment first. So you go into this, you make a comment, and then you post this one. All right, so now we have the second one here. So I had already done this one, and this is the one that's going to take it back out. Okay, so we're going to go back over to the balance sheet for this specific company, which was my WIP only. Right. And we're going to generate it as of today on screen. Great. And then we have some income, some assets, and the same amount of income and expenses. So that's how it would work for that. And then the trial balance. Where's my trial? Down at the bottom for the company, for my WIP company. And let's look at that one real quick. So now you have accounts receivable and it normalizes it. We've got your media, which I had that split, remember before, and you're debiting the accounts receivable and crediting. So this now is your revenue for the, after posting WIP, it's taking it back out and it's now become revenue for your account and then also the expense. So this, again, this is not needed for people to use in every single, not every single client will use this. Hardly any clients use that. If we go back to the 4 different ways that we really do this, I would say this is the number one way people use it. Then they use pre-billing. Is their second process as far as recognizing revenue for reporting purposes. And then if you're the rare case that you want to see it in the same period, then you're going to choose the WIP process. So that is all I have for today on the different ways to recognize revenue. And if you would like more details, again, you're going to go to your account person, which is support@workamajig.com, and let them know you would like to get more information on one of these different ways and how it can help you to be more effective in getting the right results for your balance sheets and for your trial balances. And in the end, it's your profit and loss that will be affected. Okay, there is one question before I go, is what would happen if you post WIP and then realize that you were out of budget and you can't send the bill? How do you get out of WIP? You have to open it up again. There's definitely there's definitely a way you just reopen it up and undo it, and then you can fix what you need to do and then post it again. So it's kind of like basically like on posting, like you would anything else, you undo it, the most recent one first and then back, almost like a journal entry. I guess you'd say you undo it and then you can do it again. And Erin, you were not a disruption, but thank you. Thank you for all coming, and we'll hopefully hear from you soon. Have a good day, guys. Bye-bye.